My name is Shane. I run the events over at 10 Capital Network. We have another great event here for you today, the future of housing with Anthony Schwarcz of Nabr. And he's going to give a talk, and then we'll jump right into a presentation from Casata, which is an amazing company in the space that's raising currently. So obviously, if you're interested, please shoot us an email and we'll get you guys connected. We'll also be running a poll after the event to gauge your interest. If you have any questions during today's event, you can drop those in the chat box, which I will activate momentarily here. And with that, I'm going to go ahead and introduce Anthony. Anthony, why don't you go ahead and give us just a little background of you and what you do over at Nabr, and then you can jump right into your talk.
Sounds good. Thanks, Shane. So I am head of real estate and corporate strategy at Nabr. Nabr is a proptech company that's focused on putting urban housing on the factory line through applied technology tools in ways that streamline the whole development process and brings more of like a systems thinking to what we know is a very antiquated industry. So the reason we started Nabr, which was a few years ago, and I think also why we're here today to talk about the future of housing and what we can do to fix it. Today, housing is very much of a broken industry. There's over 19 million renters in the country that are housing burdened, which means they pay over 30% of their income towards their housing costs. And this has only been getting worse with the rental price growth that has been radically outpacing the income growth, making it more and more difficult for Americans to rent and even own a home. In the current inflationary environment and high interest rate environment, this is not helping because obviously everything is getting more expensive and projects are not being delivered due to the high cost of financing. And the current solutions that are being used today are really not effective. I mean, the US government is spending over $30 billion in housing vouchers, which are very much of a short-term oriented solution. They're really just a band-aid. It's like giving someone a fish instead of teaching them how to fish. They subsidize housing by giving people a check versus making it easier to deliver more housing in a way that helps more people. So we really need to find a better way to fix this industry. As I just mentioned, supply is probably one of the biggest issues. We're undersupplied by 6.5 million homes, and this is getting worse every year. I remember the stat was closer to 3 million when we started Nabr just 4 years ago. So the solution really needs to be focused on building more inventory faster and hopefully at a lower cost so more people can afford it. And roughly around the same time that I was getting Nabr off the ground, I got connected with the Casata team, who we're going to interact with today, who was pursuing its own efforts to solve the housing crisis in Texas. Casata's mission and business model really resonated and were very crystal clear to me. My previous venture in the modular hospitality space that was also focused on prefab solutions and rapid deployment. And the Casata team was very impressive in getting the first project off the ground in record speed. And they really proved how the housing can be delivered to address all incomes and without subsidies. They've created really an inclusive community down in Austin, and where you see people of all types of demographic, all ages. And that really is how housing should be. It shouldn't be directed towards just a few. Housing should be completely democratized. And so their first project was really a great MVP to showcase how their product works. And the next few communities for Casata will really be a way to show how the solution is ripe to become more accessible throughout the country. In housing, there's so many different players that are involved, whether it's bankers, whether it's builders, whether it's the developers, the architects, the designers, and everyone is solving for risk. And risk very much is represented by the unknown. Even though someone may build a similar kind of project, there's very limited data that is used in order to make the process more efficient. And Casata, just like Nabr, is really putting data at the forefront of making the project more streamlined. And that means through repetition and data, you're able to convince and align the industry in order to make the whole permitting, construction, financing process faster and cheaper. And so companies like Casata and Nabr are really trying to make a difference in how this industry is going, where it is going, and hopefully putting everyone at a home in this country. And I think it's essential for many companies to be involved, because as I said, 6.5 million homes is not going to get built overnight. And so the more Casatas and the more neighbors and the more companies focus on this problem of undersupply through means of systematization, modularization, and also stakeholder alignment, because at the end of the day, it's not one person involved. There's such an entire amalgam of people that make housing a reality. So I really hope that JB today we can tell you more about how Casata is doing that in Texas, and I welcome any questions on where this industry is going and what it needs.
Thank you, Anthony. I really appreciate that introduction. I think that was a wonderful intro to what you guys are doing over at Nabr and how we got connected, for Casata. Shane, were there any questions that we should field before kind of digging into the presentation on Casata?
We don't have anything from the audience, but I do have a few questions myself. Anthony, maybe you could help answer this first, but what are the top 3 trends driving the housing market right now?
So, I mean, I'm based in New York, and there's a big talk of office conversion from office to residential use. And we've seen it in a couple of buildings in New York, and it has to materialize. I mean, obviously with the work from home trend that has happened since COVID, there's a lot of vacant inventory. And so this is very much of a popular hot topic that everyone is talking about. There is this notion of parametric building, which is some of what Nabr is involved in, but which is really thinking of like systematized ways in order to create housing where everything is kind of like related to one another. And you're seeing architects talk more about it. You're seeing developers talk more about it. I mean, the way homes are built today, I mean, in the single family industry, it's pretty standardized. However, in the multifamily industry, it's very much a one-off process every time. So this notion of like systematization and parametric building is very much a hot topic in the world that I'm in. The third topic I would say is the current environment. Interest rates are only going up, as we've seen again this week, and what's going to happen? And it's a very challenging market to build in, given that in the last cycle there was cheap money available that basically pushed asset prices up, and makes things today quite challenging to build.
Right. Awesome. JB, did you have anything you wanted to add on that before I move on to my next question?
No, I think Anthony's right on the money there. Those are the biggest issues that we're facing in the industry right now.
Awesome. And then what do you think is going away in the housing industry?
What do you mean in terms of going away? Sorry.
So what's kind of on its way out as far as trends go? Or what can you expect to see less of, I guess?
It's really hard to say, because I think it's quite regional. People definitely want more of their home. They want to be in a place that they also can call their own. And we've seen a lot of companies in the last cycle that have helped people put people on a path to home ownership, whether it's companies like Zero Down or Landis that made the whole like down payment more accessible. I mean, today to save for a 20% down payment in most urban areas takes over 20 years. So that aspect has been kind of like mitigated a little bit, but those companies did well in the low interest rate environment. And so today it's a little more challenging for them. And so it's just very hard to know what's going to happen in the coming months and years ahead, because it's just a very uncertain environment for everyone.
Sure. Great. This is an interesting question. How can a house be treated like a tech product? Also, I want to remind everybody in the audience, if you do have any questions, feel free to put them in the chat and we'll pick those up as well. Yeah, how can you treat housing like a tech product?
So it starts with data, right? I mean, even for most houses that are built, and even buildings that are built, you kind of know what goes into it through all the plans and the designs and the bill of materials, but things change along the way. And so there's no such thing as like big data for the construction industry in a way that's really able to generate valuable insight that allows to convert into a tech product. And that's what we're doing at Nabr as well, is we're really trying to emphasize how much data is important in order to effectuate change.
Gotcha. Cool. What kind of what information metric do you monitor on a regular basis as far as housing goes? Is there anything that sticks out?
I mean, depends across what spheres, whether it's on the construction side. Obviously, material prices are very much a big index. On the sales front, interest rates are the most deterministic factor in people's propensity on buying homes. There's a lot of metrics that can be collected across multiple segments.
Gotcha. Okay. Where can investors find more of these investment opportunities as far as real estate, the housing, all of that stuff goes?
So obviously a lot of proptech companies are not necessarily available for non-accredited investors, but I think platforms like yourself at 10 really help kind of like open a voice up for a lot of these companies.
Great. Well, we appreciate that. Did you have any other thoughts you wanted to express or anything like that about the future of housing?
We need it. We need a change.
Got it. Well, if anybody wants to follow up with Anthony, Anthony, if you don't mind putting some of your contact information in the chat box, I'm sure he'd be happy to follow up with y'all, or you can shoot us an email. We'll be following up with everybody after the session. With that, I'm gonna kind of segue into JB with Casata, and he's going to give a pitch on what he's doing at Casata. So feel free to, oh, you got him up already.
Great. Can you see my screen all right?
Yes.
Wonderful. Yeah, as I said a minute ago, Anthony, thank you very much for sharing that. It's super interesting information. And Shane, thank you for hosting this event. So I'm here to tell you a little bit about Casata. I'm the CFO of Casata. I joined the firm about a year and a half ago, and this is a really, really interesting opportunity that's set for phenomenal growth from this point forward. So Casata is a high growth build to rent multifamily developer, and we're focused on delivering high quality micro home communities at an affordable price point. And that affordable price point is really a key differentiator for what we're doing versus what other build to rent developers are doing today. Very few developers are focused on providing new attainable housing, even though it represents a massive under-addressed opportunity in America. This is at least in part because many developers can't figure out how to make the project level economics work for affordable housing while keeping rents affordable for tenants with, relatively low to middle incomes. Here at Casata, we've cracked the code for how to develop those type of high quality, differentiated, attainable housing communities. So Anthony touched on this, just a minute ago, and it's basically, decades of chronic underbuilding and lagging construction sector productivity have left around 20 million, households in the U.S. cost burdened, meaning that they spend, roughly 30% or more of their income on rent plus utilities. And so at the current pace of development, it's going to take 20 years to close the 5.5 million unit housing gap that has created that big cost burden for renters, across the country. And so in order for most tenants to stay afloat and be able to afford the rent that they're paying, people are really left paying far too much for underwhelming housing options like what you see on the left-hand side of the page here. So at Casata, we've created the solution for this affordable housing crisis. Our communities empower low to moderate income families to lease high quality micro single family residences at rents that are in line with the same type of tired, worn out Class B and C apartments that we showed on the prior slide. So Casata develops environmentally conscious communities, with each one serving as a single family dwelling, featuring both indoor and outdoor living areas. The concept's really akin to multifamily vertical apartments that everybody's familiar with, except that Casata is horizontal, with every unit is its own standalone unit. No shared walls, no shared ceilings, floors, anything along those lines. And every unit has its own indoor and outdoor living areas, as well as access to common area amenities for all of the residents. And we've laid the groundwork for rapid growth across the country by setting up partnerships with nationwide manufacturers that allow us to reduce our project costs versus a comparable brand new apartment complex by about 20%. And we can deliver projects in roughly 50% of the time it takes to build a typical apartment complex. So our homes they're micro homes. They range from 400, 4 to 500 at the very smallest end, up to about 1,000 square feet for a 3-bedroom unit. The units are tech-enabled, they're modern, they're eco-friendly, and they've got highly functional layouts with energy-efficient materials and high-end finishes. They've got light coming in on all 4 sides with clear-story windows and a lot of built-in privacy in the way we lay our units out. We've seamlessly integrated technology into all of our homes, and we included developing a proprietary dedicated mobile app where residents can manage all their needs and control their smart home. And we've also provided an enhanced resident experience with premium amenities such as, besides just your typical, pool or fitness center, we also have a bunch of community building events and event planning for on-site concerts, fitness classes, volunteer opportunities, and more that really helps enhance the community aspect of living at a Casata. So the Casata product offers the best aspects of both typical multi-family living, like apartment style living, or more common single family living. Unlike traditional apartment complexes, our units are completely standalone. No shared walls, ceilings, floors. So tenants have a level of independence that you typically would only find in a much more expensive single family home. And Casata communities include physical amenities such as naturally landscaped buffer areas, co-working spaces. I mentioned fitness centers, pools, also have green spaces and community gardens. And even though we're providing all of those units that are a much higher quality of life for our tenants versus the type of Class B apartments you see on the right-hand side, our rents are in line with the Class B apartments that you see. And we're able to do that because of using the manufacturing approach that we're using. We're able to bring our costs so far down that we're able to have rents that are still affordable, but have this significantly better quality of life. So as far as traction goes, we've already completed our first community. We broke ground in February of 2021, completed it in February of 2022. So that was 12 months. A typical apartment complex takes 24 to 36 months to build. So this was significantly faster. The community's been a resounding success. It opened up 82% pre-leased. Typically, when you open up a new apartment complex, you're under 40% pre-leased, and you're hoping to get anywhere near that level. So we opened up 82% pre-leased, and we stabilized, which means 90% occupancy within 90 days, and we were 100% occupied within 120 days. So that's huge, and much, much faster than a typical apartment complex. People really saw the value proposition that Casata brought for tenants. And we've already successfully recapitalized the project and refinanced it as well. So that means that we developed the project 2 to 3 times faster than a typical community, and we leased up roughly 4 times faster than a typical community. And one of the really interesting things here is we also nailed our target demographic. The median salary of our tenants is roughly 80% of the median income for the Austin metro area. So we really were able to bring out an affordable housing product that, basically hit people where they weren't allowed them to be able to afford rent and have a great lifestyle. And we've now gone out and built an active pipeline for how we're going to expand from here. We have 3 communities underway, which will yield another 600 units over the next 18 months. We've got the one finished in Austin. Our next community is breaking ground this summer in San Marcos. We'll break ground around the new year in Bastrop on the east side of Austin, and in College Station in late Q1 this next year. We're also acquiring land in the DFW area, in Houston and in San Antonio right now as well. And we've also received strong interest from co-development partners outside of the state, where we'll be launching our first communities, outside of the state, most likely within the next 18 months. And we're focused initially on expansion throughout the Southeast. And we believe that the demand for our product is massive. We think that there's an opportunity to build anywhere between 100 and 200 Casata communities over the next decade. Now, Casata will not be the only developer of these communities. We'll be focused on co-development opportunities with local developers across the country so that we can expand at a rapid clip. And we've got the right leadership team in place to take this, to scale. Our CEO, who came up with the idea behind Casata, is a multi-generational real estate developer. He's got over 15 years experience building in Austin. Our COO and general counsel, Noah Pollock, has over 30 years experience leading high growth companies. And I'm the CFO. I've got over 15 years of capital markets and real estate experience with a number of Wall Street firms. We're currently closing out a $2 million Series A raise. We've raised about $700,000 already, and we want to close out the round this summer. This fundraise, the purpose of it is to alleviate Casata's near-term cash flow gap and to accelerate the growth of our pipeline as we put our funds to work into each of our next communities. So the key question then becomes okay, how does Casata actually make money? You've got a cool product, but how are you going to make money? So the way we're structured is that each Casata community is a separate special purpose vehicle, and Casata Corp that we're talking about today sits on top, as you can see on this picture on the right-hand side, as the developer and the operator and the general partner of each individual community that we build. So each community, Casata will go out, find the land, put it through all of the various pre-development to get it to where it's permit ready. And then Casata will go out and raise third-party limited partner capital for that individual project and a construction loan to actually fund each individual project. So Casata sits at the top, puts new deals together, makes an investment as a general partner into each project we do, and then raise third-party capital for each project individually. So an investment in Casata Corp is an investment into every project that we do in the future from a general partner perspective. So to put some numbers to work for how that looks, is a typical Casata community is about 200 units, and it typically costs around $200,000 per unit to develop an entire Casata community. That $200,000 per unit, that includes the cost of the land, that includes the cost of roads, the amenities center, all of your various fees and soft costs and interest reserves to get it all up and running. So we will then go out and develop and basically leverage, get construction financing for that $40 million project, somewhere in the 70 to 75%, loan to cost area, which means that you need about $10 to $12 million of total equity for a single Casata project. Casata, as the general partner, puts in 10% of the equity. So for a $40 million project, Casata puts in somewhere between $1 to $1.2 million for every project that we do. Then, once we break ground and start construction, Casata earns developer fees for building the community. So we earn 4% of the total project cost, which allows us to recoup more than our entire initial investment within the 18 months that we build for a community. So we put $1 million to $1.2 million into a project. we earn about $1.6 million in fees while it's under development. Once the project's finished and leased up, we charge management and licensing fees, which are 4% of rental revenue across the top. That goes to keeping the lights on at Casata. And that developer fee that I mentioned just a minute ago is what helps us then not only recoup the money that we put into the project, but then fund our investment into our next project. And that's what really gets the ball rolling and gets the virtuous cycle going forward. But the biggest driver of value for Casata is, as the general partner in each community, we sit in a position where we have a carried interest, in each project. So to incentivize Casata to maximize returns to those limited partners that are in each community, a profit sharing waterfall is put in place between Casata as general partner and the limited partners. This profit sharing arrangement provides Casata an outsized return when the project hits certain return targets. That's the carried interest that I mean. So our carried interest in each project basically means that even though we're going to put in about 10% of the equity into every project, we'll basically walk away with over 30% ownership of the ultimate returns at the time a project is sold. So when you put together the developer fees we earn for building the project, the asset management and royalty fees that we earn for managing a project, and then ultimately the carried interest that we earn at the time of sale of a community, we'll make between a 7 to 10 times return on our initial $1 million investment into building a new community. And so where we're going from here is that's just for one community. Casata plans to break ground on 4 communities a year for at least the next 5 years, which means that somewhere in the neighborhood of the next 5 to 6 years, Casata will have built a real estate portfolio worth somewhere in the neighborhood of $1 billion, of which Casata will have a significant exposure worth over $100 to $150 million for building that portfolio. And Shane, what questions have come in while we've been going through this?
Yeah, so it looks like Timothy has a question. Do you have any interest in senior living and or the post-acute care sector? Also, I did want to answer, Chris, it looks like you asked if we'll be giving the presentation after, and yeah, we will be emailing everybody the recording afterwards, so don't worry about that. So yeah, any interest in senior living and or the post-acute care sector?
So it's interesting. One of the things is we've thought about how to structure Casata is that we've gone after a very specific niche with this initial way that we've launched Casata, is really this middle market workforce housing, tenants that make 80% of AMI, area median income, to 100% of median income. And there are multiple offshoots of where you can take the Casata business model. You can now expand this business as we scale into something that is more akin to your active adult communities that people are familiar with all the different programming that are going into that. You could also then have something that's a senior living where you are partnering and sitting, co-locating next door to nursing homes. There's a parcel of land in Houston that we've been looking at very closely with that exact target demo in mind. You can also take this product and then go, rebrand it so you don't, sully the Casata brand, and then take it and do something significantly more down market and go and do something where you really target the true capital A affordable, government subsidized, housing area that, Anthony mentioned earlier, where you're targeting tenants that make 50% of median income in an area. There's just so many paths that we can take with Casata once we get to scale for how this business can continue to grow. But the key differentiator of what we're doing is how we've figured out how to develop communities faster and at scale, which will then allow us to take the same approach and go out and target multiple different avenues across the real estate spectrum.
Gotcha. If anybody else has any other questions, feel free to put those either in the Q&A box or in our chat box, and we will be able to answer those for you. Otherwise, we're happy to answer questions offline afterward. I just wanted to know my question or thought, just a little bit more about the competition and again, more differentiators on what you're doing out there.
Yeah, it's interesting. There are, it's real estate. There's lots of competitors doing lots of different things in the real estate market. Our most direct competitors from where we are taking tenants tend to be those Class B apartments that I was mentioning, at the beginning of the presentation. And so what we found in our Austin community is that over 80% of our residents in that first community came from within a 2-mile radius from a Class B apartment, and saw that value proposition and moved over to a Casata. As far as big scale competition of who else is doing anything quite like what we're doing, we haven't found anybody that's doing exactly what we're doing. We're using the manufactured approach to then do detached units at the scale that we're doing. There is one community I found that is doing more manufactured housing, HUD product, double wide, trailer type thing across the Southeast that's at some scale, that's had some success. That's an interesting competitor. They're doing a much larger product, where their homes are 1,500 to 2,000 square feet. And, we've seen a lot of people doing tiny homes, but that's more of a for sale product and is not necessarily going to scale as well as we think as Casata, where we're giving people a more substantial place to live. So we haven't really seen anybody doing exactly what we're doing. We've seen some people doing, as Anthony mentioned, doing, manufacturing and modular construction to do vertical construction for urban infill. But they're, again, not hitting that same target demo of that true middle market workforce housing, rent constrained tenant.
Right, gotcha. So I did release a poll for the audience members. It looks like most of y'all have answered it, but anybody who hasn't, feel free to mark your interest down there and we'll be able to follow up with you as follows. But JB, do you have any other thoughts? Anthony, you as well, if you want to come up, share any thoughts before we close things out, talk about Casata a little if you want.
Yeah, I would actually probe JB to talk through why Casata is best positioned to scale, because that's really the problem of this industry. There's been a lot of good ideas in the last 20, 30 years. A lot of great companies, none of them have reached the scale quite necessary to make a difference. And maybe JB, you can explain why Casata is well positioned to scale.
Yeah, so the way we've approached building Casata is we've approached it with kind of the franchise thought process, though the economics are nothing like a franchise business. So we've built, Casata with standard operating procedures to where we've figured out, okay, how do you build a Casata? We've gone out and built out tool sets around how do you select land? How do you go through all of the different feasibility processes to really make sure that an individual parcel of land is going to fit for a Casata community? We've then gone through and built out manufacturing relationships with nationwide and regional manufacturers who can build the Casata units at scale. And then we've set out all the standard operating procedures for how do you actually develop a Casata? How do you site design it? How do you get through all of the issues that come with getting permits and getting through city council for a product like this? We've gone through and figured out all of those moving parts. We've built out the capital markets relationships as well for how do you actually finance and raise capital for every one of these individual projects. So where we view the ultimate scalability of Casata is what we'll do is as we move into here, let me find that map here. Yeah, as we decide to move nationwide and move into other markets, our business plan is to go to a developer who's local. And we have relationship. We've got a guy in Atlanta, we've got a group out of Florida, we've got a group in the Carolinas. And what we're doing with each of these groups is we're giving them basically exclusivity for a certain region to build Casata products. We then give them the tool set for how do you site select land, and we help them go through that process. We then help them and introduce them to all the manufacturing relationships we have, to our capital markets relationships, as well as give them the standardized playbook of how do you actually develop and operate a Casata community, at which point we are working with them side by side as a co-investor in the project in that general partner position, which then allows us to not have to hire people across the country. We're able to leverage local developers all over the country to reach scale much more quickly than if we were trying to set up shop in multiple jurisdictions all over the country, we're able to keep our team very, very lean and yet, scale rapidly.
Awesome. Anthony, do you have any follow-ups?
No, I think that was really well said by JB.
Great. Well, if anybody else has any other questions in the audience, feel free to ask those now. Again, we do have the poll still running for those of you who haven't answered it yet, so we'll leave that up for another minute or so. Doesn't look like we have any more questions right now. So any final thoughts, JB or Anthony, before we close things out on the future of housing or on anything?
No, not on my end. I think this was a great event. Anthony, thank you very much for joining and sharing your thoughts this morning.
You're welcome.
Yeah, of course. Thank you guys both for joining us and talking about Casata and about the future of housing, Anthony. For the audience, we will be sending out the recording, like I said, doing all the follow-ups as necessary. I want to thank you guys for joining us. Again, thank you, JB and Anthony, and we'll see you guys at the next one. We'll close it out.
Thank you very much.
All right. Bye, guys.